Truth or dare? I choose dare. All right. I dare you to have an amazing day. I dare you to have an amazing life. I hope that everything that you're dealing with, that only you know, because there's things that only we ourselves know. I hope all of the stress and the anxiety, the things that you're dealing with that you can't share with other people, that even if you tried to share with other people, people wouldn't understand. The things that you want to share with people, but you're afraid of how they'll judge you. All of those different things going on in your mind that only you know. I hope you overcome all of that. And I hope you have an amazing life, because you deserve it. Everyone deserves to have an amazing life. Everyone deserves to be happy. Unless you're a terrible person. But chances are you're not a terrible person to that extent. So everyone deserves everyone deserves happiness. You know? So whatever you're going through that only you are aware of, because there's certain things you can't share with people. And even if you could, you're afraid of what they'll think. So all of those things, I genuinely hope that you overcome them. And best of luck to you. In today's video, we're going to take a look at the SP 500, the NASDAQ. We're going to take a look at what the hell is going on with the market. The redundant yields, VIX, and dollar. We're going to take a look at all that stuff as a whole. Yeah, man. So if you guys enjoyed the video, please make sure to like, subscribe to the channel if you guys are also enjoying the content as well. And without further ado, let's get started with the video. All right, I lost a trade. Boo-hoo. I stream on Discord. I voice chat on Discord. I type out my trades on Discord in case you can't live stream. So I share all of that stuff on Discord. I give you guys my thought process minute by minute of what's going on in the market on the live, the same way that I used to on TikTok and on YouTube and Twitch. So if you guys want access to it, the link is in the comments. It's in the bio. It's in the channel description. So you would have to go into that Discord, follow the steps in the how to join channel, and you'll get access to everything. You'll also get access to my trading view buy and sell indicator. So you'll get access to all of that stuff in one nice little package. That's why I don't stream on YouTube or on TikTok anymore. I only stream in the Discord channel. So if you guys want access, definitely check it out. And hopefully I will see you guys there. All right, so the VIX, the yields, and the dollar, they all have an inverse relationship to the market. We're going to go through them one by one, and we're going to see how much strength there is in each of these different instruments. All right, number one, the VIX. So like I said, the VIX has an inverse relationship to the market. When the VIX rises, the market should be falling. Cool. The VIX trading below 13, it's creating a bit of a bullish base. It could rise higher. That is clear, right? We could end up rising higher. That's fine. But anything below 13 and 1350 specifically on the VIX is bullish on the market. So currently we are clearly at 1250 on the VIX. Bullish on the market. All right. Next, let's take a look at the yields. The yields also have an inverse relationship to the market. The yields, when they rise, the market falls. Nice and simple. The yields have been nice and flat these past few days. Barely any movement, barely any huge bounces. And now the Bollinger Bands on the yields have started to fall. So we can fall even more dramatically on the yields before getting overextended to the downside. So when we are overextended to the downside in terms of the Bollinger Band, for example, over here, we should be getting a bounce, okay? But as you can see, this lower level of the Bollinger Band is shooting downwards. So as it's shooting downwards like this, it means that there's a lot more room to fall with multiple red days to go before we get overextended to the downside on the yields. So this is actually, unless we get a nice bounce soon, this can just completely just drop much lower, which would actually be very bullish for the market. So it's not looking too good for bears. Next, let's take a look at the dollar. Similar concept to the yields. The lower Bollinger Band on the dollar is starting to pull lower. As it is pulling lower, you can obviously see nice red candle like this. The lower Bollinger Bands are falling lower. We can continue to have red candles. As we see, we had one today. And again, we can do this without getting overextended to the downside. Just according to what we're seeing, this is starting to look bullish for the market and bearish for the dollar, potentially bearish for the yields as well. So the VIX is showing some bearishness for the market, but the dollar and the yields are showing more bullishness for the market. So a little unrelated, but this is the ITB. This is the iShares US Home Construction ETF. So what we're looking at is basically we had a big run up. A lot of this had to do with a lot of the strength in the Russell 2000 and different, obviously, the economically sensitive stocks in the market, right? So when people have extra money, they have more money to put into the construction of their houses. Home Depot, Walmart, appliance stores, things like that are going to also do well. But then interestingly enough, we have home data and home sale data coming out this week. So buying puts for January would probably be helpful, because the money that people are going to be getting, I don't think people are going to be buying houses as aggressively. So for January, I think puts would be good, because I don't think the home sale numbers, and I know for a fact the cost of these houses are also going to be dropping, but it needs it's not really going to happen as much until we get, all I'm saying, I can't really articulate this, but I think that puts would be good, because there is home sales news coming out this week, and with the rate cuts happening in 2024, I believe that this would get some preemptive selling, because people are not going to put as much money into their home construction as they would into their day-to-day living. I think people are content with their living space, especially during 2024. It's not going to be a time where the majority of people are going to be looking to buy new houses. Houses are still going to be inflated compared to where they were prior to 2020. So I hope that makes a bit more sense. We'll see how these play out, but I think this would be a good opportunity to short, especially since we had this big pop up due to the positive Fed and Powell news. All right, so I hope that makes sense. So the IWM, the Russell 2000, biggest winner today. We had a lot of junk garbage stocks. We had the Rokus, we had the Bingos, we had the really garbage, terrible stocks. We also had energy, and we had the banks doing well today. The NASDAQ didn't do too well. Obviously, it's still it was obviously still showing strength, but the IWM is the biggest winner. Again, because the IWM is economically sensitive, and when the economy is doing well, the Russell 2000 with economically sensitive stocks is also going to be doing well. So, we are just skyrocketing here. You can see the upper level of the Bollinger Band is continuing to rise. So, which means that we can continue to go higher without getting extremely overextended. So, as you can see, we gapped up. We never got a pullback, but we maintained enough for the Bollinger Band to catch up. So now that the Bollinger Band has caught up and it's surpassed, we can continue to rise alongside this Bollinger Band. So this is pretty fun and interesting to see on the Russell. Our next major level of resistance on the IWM is at 202 and then 204. So those are the two next major levels of resistance on the Russell 2000. The NASDAQ made new highs. New all-time highs. So the next level of resistance is to be seen. We don't know. but the level of support is going to be prior resistance. So it's going to be at 408.70, 408, and basically this is it's the same concept as what happened with the IWM. We had a big move upwards. We stagnated enough for the Bollinger Band to catch up, and then we just continue to rise. So now we can continue to staircase. Similar to what I said in yesterday's video, we can continue to staircase up alongside this Bollinger Band. And yeah, you know, we can't really fight the Fed as much. We just have to follow what big money is doing. And we're going to get some news towards the end of the month to see how big money is positioning for December and what their thoughts are going to be for January. But into the end of the year, clearly the seasonality and the Santa Claus rally and things of that nature are doing really, really well. So for the NASDAQ, congratulations to everyone that was completely bullish, to everyone that's still holding on to their calls. Definitely, I'm going to stick by this. This is not the time to be entering into any longs unless you have really, really tight stop losses. But aside from that, you know, it's more of a day trader's market. It's tough to really take longs with after like a huge extreme move to the upside. And it's also really, really tough to take shorts when the Fed is very bullish on the market. So this is fun. This is fun for the market. Last but not least, the SPY. Same concept on the SPY with the Bollinger Band as the NASDAQ and the IWM. You can see that we are just climbing alongside here. We have major resistance at 475. Major resistance at 475. Then after that, we have the all-time high at 480. But before that, we have resistance at 477. Then basically the all-time high is at 480. So we're almost there on the SPY. We're a rock's throw away to all-time high on the SPY. We made a new all-time high on the NASDAQ today. And once again, now is really not the time to be entering long. I stuck by that. And I still think, you know, it's not really an intelligent time to swing. It's more of a day trader's market. And yeah, man, it is what it is. If we get a big impulsive move to the upside, then we could get more overextended to the upside in terms of the Bollinger Band. But you can see that we are just hugging this and we can just continue staircasing up. The same way that we saw with the NASDAQ just now, we can continue staircasing up. But the thing is that we saw how the dollar and the yields, the lower level of the Bollinger Bands are pointed lower. And as the dollar and the yields could fall lower, that is bullish for equities and the stock market. So we'll see how this plays out. All right. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe. If you guys want access to the Discord, make sure to click the link in the comments or in the bio. And I will see you guys bright and early tomorrow morning. Thank you.